Hey, welcome to today's live stream, man. Today's gonna be an amazing stream because this is something that I actually enjoy talking about. Because I do have, children myself, right? And as a parent, our ultimate goal is to put our children, in a better situation than we are in. You understand? So that way it can kind of like keep growing from there. So your children and your grandchildren and your great grandchildren, right? So today's stream is titled "Why It Makes Sense to Have a Sizable Life Insurance for Your Children," right? And before I dive into it, right, I kind of want to go over some few um, datas here, right? Number one, chronically ill children in America is about 10 to 43% of children in America who are chronically ill. A study found that 43% of children had at least one of 20 chronic health conditions in America today, right? In the United States, 27,000 children are diagnosed with critical illness each year. 49.68% of life insurance claims are for critical illness, right? So, chronic illness is pretty much, for example, if you are unable to take care of yourself, you are unable to perform 2 out of 6 of the daily living activity. That's bathing yourself, clothing yourself, using the bathroom by yourself, right? Critical illness are things like, cancer, heart attack, stroke, dementia, renal failures, right? So for critical illness for children, right, are things such as, again, one, cancer, two, severe asthma, okay, number three, congenital heart disease, Down syndrome, cerebral palsy, type 1 diabetes, Crohn's disease, and the list goes on and on. Okay. The big five critical illness cancer are critical illness are cancer, heart attack, stroke, major organ failure, and multiple sclerosis. Okay. Cancer is by far the highest of all claims paid out under critical illness policy. We all see all the time the St. Jude's commercial that we see on TV, right? Of children that have cancer and things like that. Now, we I know we all hate to think about this type of stuff, right? But um life is life. And we kind of have no control over things that happen in life. But what we can do is try our best to actually prepare for it, right? So it's something that we don't like talking about, but it is things that happen, to children. A few weeks ago, when the situation happened with the CEO of United Healthcare, right? I ended up watching John Q, and in the movie John Q, it was pretty much about Denzel. I forgot the role he was playing, but it's Denzel and his son having a heart issue, and he had to get a heart transplant, right? But the insurance wouldn't cover it, and they really didn't have the money, okay, to be able to pay for it out of pocket. If you guys remember in the movie, he actually was trying to sell his house. He cashed out some savings. Neighbors were donating, and they still couldn't collectively, put the money together, right? These are things that happen every single day to families. Okay, so when I talk about having a sizable life insurance policy for your child, it's not in the event that your child passed away and you collecting some money and living well. No, that is not what it's about. This is in the event that something like this happened, you actually have a sizable amount that you can get from the policy. A lot of people have insurance on their children for like 10,000. I even see one for like 5,000 through. I'm not going to name the company's name, but people have 5,000, 10,000, $20,000, right? And they say they have life insurance for their children. No, that's called death insurance. That's not life insurance. Okay. Those type of policies just cover funeral and stuff like that. When I'm talking about life insurance, I'm talking about a policy that cover all aspect of your child's life, from health to finances to when they eventually pass on. Okay, that's truly what life insurance is. So when people have insurance for their children for like 10,000, 20,000, I have to educate them and let them understand that, listen, it's great you at least got something, but that's pretty much just for funeral. It's not cover all aspect, all other aspect of the child's life, right? Now, I'm going to go down the reason for you to have life insurance for your children, and a sizable one. Okay. The number one reason is, one is the protection of your child's life, specifically health wise. Okay. And I learned this through my years in the industry and dealing with clients who I've met. I remember I met a client in Randallstown, Maryland. They have 4 children. Okay. And I did a policy for the parents. And I came back later and said, hey, why don't we do something for the children? It was, a little odd conversation at first. You understand? But when I broke down the reason why it makes sense, at that time, I pretty much more so touched on the cash value side of the policy itself. I didn't even touch onto the other aspect of the policy. Now, one of the child, and so I think the child at the time when I did the policy had to be maybe 10 or 11 years old, because it was a while ago, right? And the child ended up growing up to be a grown woman, and she ended up having a child. While having a child, I believe it triggered her lupus, from what I was told, right? And if you guys know what that does, it actually like destroys your body, right? And the policy ended up coming in handy for the family. Like till today, they will call me and say, hey, Maxwell, we're having someone in the house, come on over. Because that policy now, because of the living benefits, is what's allowing the young lady to survive. It's what's allowing the mother of that young lady to be able to take off of work to tend to her. Because if you're taking off of work, you're going to lose income. Well, how do you replace that income? You understand? So that policy is the reason. And I remember her telling me, Maxwell, do you remember we actually didn't want to do this? I was like, yeah, I remember. And she was like, thank you so much for helping us understand why this makes sense. Okay. Number 2, your child would not need to get future coverage because you've already laid down the foundation for them. Okay. So when you have a sizable policy for the child, because when they're younger, it's real inexpensive. It's real inexpensive. Like a child having a $500,000 or a 1-year-old having a $500,000 policy compared to a 30-year-old having a $500,000 policy, the price point is significantly different. Significantly. So if you get them that policy at a lower cost, when they get to be grown adults, they might not need to get any additional coverage. Now, unless they become like multi-millionaires or they're making multi-six figures and they actually need, an additional coverage, or they have like, multiple children and they just want more coverage, great. But outside of that, if you open up a sizable policy for them, you've already set them up in a great position. Okay. Number 3, being that it is a cash value policy, you have now created a compound interest policy for them that will continue to grow and grow and grow. So again, you actually set up for them a wealth building vehicle from age 1 all the way till they either retire or they pass away. Okay, you've already set that up. And the way building wealth involves a couple of things. One is money, two is time, and three is interest. You make money based on time and interest. The sooner you get started, the more the money can grow for you. The later you get started, the more money you have to put up front to get the same result. You understand? So if you get that started for them early, they start to build generational wealth early. Number four, you have now created a college savings plan for them that is now predicated on them going to a college or university. So what do I mean? When you open up a college plan for children, let's say a 529 plan, right? Which is a state plan, right? That plan can only be used for a college or university. So, for example, if the child says, "I want to go to a trade school," okay, I want to be a barber or beautician, or I want to go to electrician school. Well, you can't use that money for that. Okay, the only way you have access to that money is you have to cash it out. Now, to cash it out, there's about a 40 to 50% taxation in getting that money out of a 529 plan, which is crazy. But if that money was inside a cash value policy, there's no stipulation. So your goal might be for your child to go to college and university. But if your child say, "Hey, mom, dad, I don't want to go to college. It's not for me. It's not what I want to do." Then your child have options. Okay, what do you want to do? Well, mom, you know what? I want to be a hairstylist. Well, dad, you know what? I want to open up my own barber shop. So I want to go to barber school. Okay, no problem. You can now take that money out from there and pay for the school, and the child can get the education, to acquire those skills. Okay. Um. Now, number five is it is a tax-free wealth creation for your child. Okay. It is a tax-free wealth creation for your child. Example. Um. I wrote a policy for a child. It's $500,000. Now, a side note, your child can only have half of what you have as a parent. So if your child has $500,000, then you have to carry at least 1 million. You or your spouse or somebody, the husband or the wife, somebody have to have at least 1 million for the child to have 500. So, for example, let's say the parent has 500,000, the child can only get 250K. Okay, so that's just a sign that you guys want to remember, right? Now, the policy I did, the child has it was 500K for the child. The father carried, I believe, 2.3, and the mother carried about $800,000, right? So that was more than enough to make sure that, okay, you know what, the child can at least get the 500K. Okay, this child was 1 year old. Now, when we ran the numbers, by the and this is the parent contributing $3,000 a year. That's about $250 a month, right? By the time this child is 18 years old, the child will have $79,000 in there tax free. Now, can we all agree whether you want to go to college or university or trade school? That should be sufficient enough to cover at least 3 to 4 years worth of schooling, right? And this is again because you got them started so much more earlier, right? Now, by the time the child is 35 years old, you have a total of $317,000 in their cash. Remember, I mentioned this is about wealth creation and getting your child started so much earlier, right? By the time this child is now 50 years old, the child will have $835,000 inside that policy, tax free by the age of 50. By the time the child is 65 years old, $2.2 million will be in there tax free. Now, can we all agree that that is something amazing that you put together for your child, right? Because you get them started so much earlier. Now, let me share this with you guys. The total contribution that the parent, or if the child took it over, because I'm assuming the parent's not gonna pay this for their lifetime, they're gonna hand it over to the child at some point, right? And the child continues to do what the parent was doing. This is the outcome that the child will receive. But with a total contribution of $195,000, that's how much they put in total. By the time the child is 65 years old, it will help that child amass $2.2 million. That's almost 20 times the return because they started off so much earlier. Now, let's say this child lives a long life. God bless the child, and the child lives to age 90, right? And the child passes away. Even if the child have withdrawn money during retirement to live off of, even if the child have taken money to pay for school, even if the child have taken money out to buy their first home, and the child passed away at age 90, the family now get a life insurance death proceed of $12 million. This is what I mean when I say generational wealth. This is how you set your child up for future success and beyond your child, your grandchildren. This is how you change generation upon generation's life. So when I sit down with clients and I do a review and they say, "Oh, I have a policy for my child. It's 10 or 15,000. Oh, my mother opened up a policy for my child. It's 10 or 15,000, and it's with this company." And I think you guys, I'm not going to name drop, but I think you guys know the companies I'm talking about, right? That is not life insurance. That is death insurance. Again, when I speak on life insurance, I'm talking about covering all aspect, ensuring all aspect of your life. That is your health, that is your finances, and that is when you transition out of here and what you're leaving your family behind. Okay. Now, last but not least, the reason why you want to have a sizable policy for your child is, and I know a lot of people have not experienced this, and I pray no parent ever experienced this. But can you imagine losing a child, right? And having to figure out how to bury the child because you don't have insurance on the child. But then after you do that, in less than a month later, you have to go back to work because most jobs don't give you that much time off. So you don't even have time to grieve, right? Because you have to go back to work because the more the bills don't stop coming. The bills don't stop coming. Do you know how many people have fell into a depression when they lose a loved one? My brother passed away. He was a week before his 21st birthday. And I remember I didn't even want to come out of my apartment for 4 months. The lights was off. I didn't want to turn the lights on. What allowed me to survive at that point in my life was the job I had. They pretty much pay me 3 months of my pay up front. And when I come back to work, they will be taking some out of my paycheck. And that was my brother, not even a child. A lot of people end up losing their homes, lights being cut off, losing property, losing cars when a child passes away because they go through a depression phase that they don't really care about nothing at that particular moment. They're non-functional, right? The death benefit is what is going to come in to offset that. It will allow you to take time off to grieve without worrying about having to go back to work or worrying about how to pay bills. You're not getting a life insurance policy to get rich. Again, you're getting it to cover all aspects of your child's life, right? It's funny. I did a Google search, right? Because I want to find out exactly um, how many people, the percentage of people who have lost their homes because a child passes away, right? And this is what it says. It's difficult to find a precise stats on the number of people who have lost their homes specifically due to the death of a child because such data isn't widely tracked. But studies indicate that experiencing the loss of a child can significantly impact financial stability. Sometimes losing a child, sometimes leading to a housing instability due to factors like reduced income, increased medical costs, and emotional distress, impacting work ability, potentially putting individuals at risk of losing their homes in extreme cases. This is real stuff. Sometimes when you see people on the streets who are homeless, a lot of it, sometimes, not a lot of it, but sometimes is a person who can connect back with reality after losing the child. And they go into drinking, they go into a depression phase, all these things. The death benefit comes in and allow you to be able to maintain life while you're dealing with the grief. It allow you to get counseling, seek some help. All these things are not free. All these things cost money. So I hope this message today helps some people because when I sit down with a lot of people and I talk about getting life insurance for their child, they get turned off because immediately in their mind, they're thinking, oh, I'm not thinking about my child dying. Nobody should be thinking about their child dying. Nobody. But what you want to do is plan for in the event that some health situation happened to your child, that you're financially covered if you need the access to the money to pay for medical bills, probably even better doctors, probably better treatment, better medicine. Okay? You also want to make sure that, hey, you got something in place for your child. So when your child starts to, grow up and age and get into life, you can help them financially, down payment on their first home, okay? Paying for school, okay? For, let's say, their wedding, okay? And you've already started planning for them that can gear them towards their retirement. right? And then ultimately, if they pass away of old age, okay, that money has been transferred to their children and their children's children. So you as a parent have already set that up for them. Okay. Um, my name is Maxwell Akinsanger, and I am the CEO of Titan Evolution Group. If you are interested in getting a one-on-one and going into further details about how this kind of plan work, or if this interests you, you can text me at 443-208-5480. That is 443-208-5480. Or you can go to my site, which is titanevolutiongroup.com. That is titanevolutiongroup.com. I want us to change the way we think about life insurance, not only on ourselves, but on our children. The information I just given you today, this is exactly how the wealthiest of wealthy have been planning for their children for years. For years. This is why we see certain people and their children are experiencing life success. And we end up calling them trust fund babies and things like that. Well, they're only trust fund babies because their parents put the plan in place for them to be that. And everybody have access to this. It's not just for the wealthy. Everybody have access to this. It's just, are you going to take action? Are you going to take action and put that in place? You understand? So again, if you are interested in a plan such as this, please feel free to message me, and we can go over this and see how this fit, for with your financial goals and what you want for your family and your children. All right, you guys have a wonderful and blessed evening, and I look forward to seeing you soon.